Stock Charts Trading. Today I want to talk about double tops and double bottoms. So here's the statistic rate on double bottoms. It's at 78%. So if you go into this trade, know that you're going to have almost a 25% chance that you're going to lose. Good news is you'll have a 75 plus chance that you're going to win.
So you're telling me there's a chance? Yeah!
Now a double top is about 75%, right on the nose. So I want to kind of talk about why I don't like to take this trade anymore. Okay, here we are on SPY, and this was just before the Corona crash, and then obviously we had a huge down, and now we've come rallying back up into these highs, and we had the perfect setup for a double top. But what does price keep doing? Up, up, up. So double top is when you have one high and you come over and you have an equal high, and then price uses that as resistance and starts to fall back down into the support level that we have had here, which usually makes up like a flag pattern and other things, and we're going to talk about that. And here's the actual trade setup. Once you break this support level, you enter into the trade. You can come here at about a 50% Fibonacci and put your stop in. Then you would make a range box of your highs and lows, and you would duplicate that down, and it would give you the target where to exit that trade right in here. Fairly simple, right? But this is why the trade does not work. You have a high there, you have a support level here, you have another high, and you get into the trade and you say, ooh, double top, and you start looking to go down. But flag pattern is a trend continuation pattern, and so it breaks that double top, maybe a triple top, and keeps going up, and you're losing money. Or potentially what we have right now on the SPY, where prices come up, it's hit into this resistance, thinking we have a double top, getting ready for that breakdown, but it keeps going higher. Another trade pattern of reason why double tops don't work is descending and ascending triangles. So you have this run up into this resistance level. You hit your head again on this resistance level, hoping it's going to go down, down, down. And then what? Trade continuation to the upside. Low, double bottom. And this is why you can't take a double bottom trade when you see it come into support, because this really was not support. Price kept going lower. Here we are on the broadening pattern. You have a high and then you have a double top potentially, and it keeps going higher. Then you have another high, potentially double top, but it keeps going higher. And it keeps going, and it never really gives you a double top because of the way that the pattern operates. Here you are on cup and handle, you come over, you have resistance here, you think that this could be a double top, price starts to fall in the right direction. Cup and handle though is a trade continuation. And that's why you can't take these double top trades when you come into resistance in hopes that it's just going to break down below this support level down here. Here we see it with an ABCD pattern. If you're thinking that here is support and then you're coming into support, getting ready to take an up trade, bouncing off of that support, this trade would not work. Now we're looking at three drives. Support, come back in thinking this could be a double bottom support. It keeps falling off. Then you have support here. You think this could be double bottom support, and it keeps falling off. And there's lots and lots more patterns that do this. They go lower or higher than a double bottom, double top. So how do you fix this problem? Well, for me, instead of using horizontal lines and taking trades off of support levels at horizontal lines, I am looking for diagonal lines of support. I have way more trade success on a diagonal line of support than I do a horizontal line. And when you're drawing, you could also use multiple places of support and resistance to come up with the correct point that will give you a reverse level. It happens over and over. You just have to get used to having your eye skip over the horizontal and go for the diagonal line, because the diagonal line can make things more clear on when to get in an extreme overbought or oversold situation, giving you a lot higher probability. Okay, let's go back to the SPY and let's look at our potential double top that failed. Now, if we open it up and we use a 20-year chart, weeklies and we zoom it in a little bit, we use our tops. We have resistance. We have a little bit of resistance pull off. We have resistance. And now where are we? Right back to that resistance line. Now I know you're questioning, is this the right angle of a resistance line? And so then just take all of your highs to other highs and just keep on drawing them out to kind of give you another look at what the possibility of the high could be. And the more lines that you start drawing in, the more you'll start to be able to recognize exactly the zone. Now that we've dialed it in using our support and resistance levels of all these highs and lows, we see that we've come into a range where you have a lot of probability because of everything pushing against each other. So now that we've seen that so many patterns are used with diagonal lines instead of horizontal, we should, one, have a higher probability. Two, we have confluence showing a major resistance between these two lines right here with a higher resistance level probability. So with trading long-term or short-term, divide up your trades so that you can get into this twice. Once on the pink, once on the blue. And when you make your trades, make sure you have enough time for them to work out. And we've talked about that in our other videos, 5 steps to trading. I hope this gives you a different view of how to take your trades, where to take your trades, and give you more confidence with more confluence. Leave a comment below if this helps your trading. Until next time.